Hello everyone, hope you're doing well. Today we will speak about asset allocation, how to get it right. Firstly, even before that, thank you for last week's feedback on last week's video. And also a lot of you shared what kind of topics you would like to hear. Some of the topics which have come up are how to invest for and during retirement. I've tried to club a few related topics. Power of compounding, how it works, stock trading, short-term investments, and asset allocation. This is a video based on the feedback from last week. So now let's get started in terms of what is asset allocation. It's basically deciding where do we invest, what do we construct in terms of our portfolio for long-term goals, retirement and kids corpus. Do we invest in equity? Do we invest in fixed income, real estate, gold, and various other asset classes? Why asset allocation? Well, it reduces portfolio fluctuations via diversification. It also gives better risk-adjusted returns because fluctuations are lower. And more importantly, it's, you can say, a way of investing with peace of mind. So let's get started. This video will be applicable to most of us. Two important rules. Emergency reserve is not part of this asset allocation strategy. A 6 to 12-month expense equivalent should be kept aside. And the house that you stay in, that is not considered as an asset. As I said, most of us, 99.97% of people, this would be applicable. You may be in the 0.03% as well. So instead of giving you asset allocation by age, I'm going to give you a different asset allocation strategy where it is going to be based on your portfolio size or net worth. That is a more universal way of approaching asset allocation. So firstly, let's start with people whose portfolios or net worth would be below 25 lakhs. What should an individual with this kind of portfolio size be looking at in terms of asset allocation? The focus over here would be returns and growth and liquidity. So given these two focus areas, the asset allocation that would be ideal for them would be an equity heavy allocation with 75% allocation to equities and another 25% to fixed income, because there could be certain liquidity requirements, though we've factored in an emergency corpus already. Next, let's speak about people with a portfolio or net worth size of 25 lakhs to a crore. Here, this asset allocation would again be similar, primarily towards equity, 70% in equity. Fixed income would be about 25%. And gold and other investments of about 5%. Focus is again same, returns and liquidity. Coming to the next, you can say, asset allocation strategy for a person whose portfolio or net worth is between 1 and 5 crores. Here, along with returns, you're also looking at a bit more of diversification and ease of operations. I'm not focusing as much on liquidity because your portfolio size is reasonably higher in this case. So from an allocation point of view, you can start looking at, besides equity, which is a growth asset, you can also look to slowly take exposure to real estate, given the fact that that also has good growth, but suffers illiquidity. So you would have like a 60% portfolio towards equity, 15% towards real estate, fixed income would be 20%, and gold and others could be 5%. Others could be various options that are available in the market, so not really getting into more specific details. Next, asset allocation for a portfolio size between 5 and 25 crores. Returns, as usual, means everybody's focused. Diversification, but people would want to explore more avenues over here. So we would look at different assets as well. So a portfolio construct could be 50% equities, 30% into real estate, fixed income of 10%, because the size of the portfolio is larger, so fixed income can be a lower component. Gold and other alternate investments could be up to 15%. This would be a strategy for people with the 5 to 25 crore bucket size as such. People above 25 crores, as I said, means I've not covered that 0.03%. They don't really need to you can say have any standard asset allocation, because given the fact that with a 25 crore plus portfolio, they can comfortably plan various investments without really giving that much of importance in terms of how much goes into each asset class as such. So key takeaway to improve your portfolio returns: get your asset allocation right. That determines the maximum part of your portfolio return. So a balanced portfolio with good returns, liquidity, and ease of operation should be what you should be working towards. Don't mess with your asset allocation just based on what has happened in the last 12 months. I'm not talking about the previous 12 months, but I'm just giving it in general, that based on short-term movements of different asset classes, don't decide to tweak your asset allocation, and think long-term. That is always going to work in your best interest. Hope you like this short video on asset allocation. I know asset allocation is a very vast topic. I can actually have a Zoom session for an hour and still not be done with it, but I just tried to give you some highlights. We can always discuss further as it may be case for individuals. Keep learning, keep growing, and do share your feedback, share your videos, share this video with others. Thank you.